Hello everybody and welcome back to our channel. In today's quick video, we're taking a deep dive into the latest stats, charts, and trends shaping the Reno real estate market, this time for July 2024. So, are we seeing a shift in the market? And is summer a good time to sell or buy a home? Stick around as we unpack the numbers and provide insights that will give you an inside edge for your next big move in real estate. Don't miss out. Let's go.
Assist you sell way smarter.
So before we get started, a few items to mention. Number one, this is for the Reno-Sparks metro area only and includes single family residential properties only, meaning basically houses, condos, townhomes. Does not include apartments or commercial or land, lots, etc. Now, if you look at these charts, on the top will be our main data point and on the right will be compared to, in this case, compared to the previous year. Now, this is the July market update. However, our stats are only through the end of June. So when you see compared to, it will show you the percentage difference compared to the previous year. Now, the first chart we always look at is mortgage rates. Why? Because it has the biggest impact on prices and the real estate market in general. And I'll show you why here in just a moment. Interest rates currently are sitting right around 7%, which is up slightly from this time last year where they're sitting at 6.7%. Now, the long-term trend is probably going to stick right around that 7% mortgage rate. So if you're hoping for super low interest rates to come back in the near future, don't hold your breath. It's probably going to take some time. What impact does that have on the overall market? Well, obviously mortgage payments. The higher the interest rate, the higher the mortgage payments. This is the average mortgage payment for a median priced home with 20% down in and around the Reno-Sparks area. Right now we're sitting at $4,196 would be your payment at 20% down. Now that's up about 6% compared to this time last year where it was $39.58. But quick explanation on these charts. On the left side is a data point. In this case, it's the actual mortgage payment. On the bottom is a time frame. And these go back to January of 2014, so just over 10 years. So extremely expensive mortgage payments, and this is why interest rates have such a major impact on the market. Now, what does this mean for affordability? What we're looking at is what's called the Affordability Index. So 100 would be affordable housing, meaning if I earn the median income locally, I can afford 100% of the median home price. As this number drops, it becomes less and less affordable. Meaning if if it was a 90, I could afford 10% less than the median value based on the median income and so on. We saw this massive fall or drop in affordability. And what does that correspond to? Exactly, interest rates on the rise. So that's why we cover interest rates so closely. They have an impact on mortgage payments, affordability, and so on. But what effect does it have on the median home price? Well, not a whole lot, except if you look back here, right? Well, right now we're sitting at roughly $555,000, which is up 4% from this time last year, where we were at $533,500. Now you can see we've had this significant rise in median home price. Got the peak back here in 2022. We saw a major pullback. Now, what corresponded with that pullback? You guessed it. In 21 into 22, interest rates shot up immediately. We saw a pullback in prices. Saw a bit of a rebound recently, and we're starting to see a bit of a pullback. But you'll notice we're starting to form a trend line here, which is right around that 5.25, 555 range. Hopefully that will stay, and I do believe it will based on some of the information I'm going to share with you here in just a few moments. Now let's move on to actual listings within the marketplace. We're going to talk about new listings first. Now, this is just the flow of new listings that came on the market in June. This isn't the total listings available. This is just people that have stepped up and said, yeah, I'm ready to put my home on the market. Let's get it up for sale. Let's put a for sale sign. So this is the new flow of listings. 689, which is down 2% from last year where there were 703. Now, if you look at new listings by price, that's where things start to get interesting. We had a significant number of listings come on the market between 750 all the way up to $1.5 million or more. That's where a significant chunk of these listings have come from. But still, the majority of listings are on the market between 400 and 500, 5 and 6, and 6 to 750 is where the most listings are. So over here you see the number of listings. On the bottom we have the price range. Now let's look at active. You're probably asking what's the difference between active and new. Now active is just the standing inventory that's available. These listings could have been listed a month, 2, 3, 4, 5, 6 months ago. It's just the number of listings that are available that If I went out today and wanted to look at a house, this is the number of homes that are available to purchase. But also, if you're selling a home, this would be your immediate competition. Right now, we're sitting at 1,133, which is up 16.6% from this time last year, where we only had 972. So that's a good sign. We're starting to see new listings are pretty strong, a little lower than we'd like to see, but we're seeing active inventory hold pretty strong. But this is where it gets interesting, is when you break it down by price. A lot of that active inventory is coming from extremely unaffordable price ranges. Well, I'm talking 750,000 and above. At closed sales, 480 total closed sales, which is down over 10% from this time last year, where we had 534. And you can see the significant drop in the number of sales. Now, that's a direct result of a lack of listings. When you have very few listings, obviously you're going to have very few sales. But let's look at closed by price range. Again, another interesting chart. Look at how few listings closed between, let's say, 750 and $1.5 million plus. Most of your closings are between, or your sold homes are between 400 and 500, 5 to 6, and maybe 600 to 750. So we have very few sales in this upper end price range, but we also have a bunch of actives. So what we're starting to see is when you build inventory and you see sales start to fall in a price range, that's when you start to see pressure on prices. One chart that one of our viewers asked for in the last few months, and first of all, appreciate the feedback, comment below, hit the like button, hit the notification button to make sure you're always aware of what's going on in the marketplace and you never miss one of our videos. But one of them asked a good question, which is, hey, higher interest rates, have that led to more cash buyers? Meaning, look, when interest rates are dirt cheap, nobody wants to spend their money that they have in reserves on a mortgage when you can get a mortgage for 2.5%, 3.5%. So to answer your question, I brought up the chart on total cash sales. And to answer your question, yes, we have seen a little bit more cash purchases, but not significantly more. We're sitting at 29.6%, which is only up 1.3% from this time last year, and is only slightly above the long-term trend, which is right around between 20 and 25%. You can see here is sort of the long-term trend. So we are slightly elevated, and that's to be expected. So to sum this all up, I do think there's some good signs on the horizon. We're starting to see inventory build a bit. Even though it's in the upper end price ranges, we're also seeing it in the lower end price ranges. If you're looking at selling your home in the near future, it's a very good time. Make sure you're ahead of the curve, you price very competitively, your home will sell. Speaking of selling homes, if you're thinking about selling a home, there's absolutely no reason to pay huge commissions. I'm talking 5 or 6% or more to sell your home. We are a local real estate company, been here since 1987, sold thousands of homes, saved local homeowners millions of dollars compared to paying 6%. And we'll sell your home for only $49.95. And if your home is over $500,000, it's only 1%. A significantly lower fee than you'd expect to pay for most real estate companies. And here's the best part, folks. We do absolutely everything. We show the house, advertise it, run the escrow. We help you stage your home. Obviously, we help you price your home correctly. If you want to know what your home is worth, I mentioned it before, click over here, find out now, type in your address, we'll send you an automated report. Regardless of what you choose to do, we wish you nothing but the best. Thanks for joining us today. We'll see you next time right here on the Reno-Sparks Real Estate Market Update Show. Bye-bye.
Assist you sell way smarter.